January 14th, 2026. The US Mint just went dark. Royal Mint sold out. Silver breaks $90. The system is cracking, and you're about to find out why. Subscribe to my channel and press the bell icon to get the latest updates on the silver market. Friends, we are living through history. Yesterday, January 14th, 2026, the United States Mint suspended all sales of its silver coins. Just think about that. The official supplier of money for the world's biggest economy just said, "We can't price our own products anymore." Why? In their own words, rapidly increasing silver prices. Silver is moving so fast, so violently, that even the government can't keep up. Right now, as I'm talking to you, silver is trading around $90 an ounce. That's a 25% jump in just 2 weeks. It's up over 190% from where it was just 1 year ago. And it's not just the US Mint. Across the ocean, the UK's Royal Mint is completely sold out of silver. Their website just says, "Email me when in stock." These aren't small shops struggling to keep up. These are the official mints of two of the most powerful countries on Earth, and they're basically out of the silver business. Let me be clear, this is not a drill. This isn't a small supply issue. This is the start of a major breakdown in the global silver market. For years, people in the precious metals world have warned this day was coming. They talked about supply shortages, paper market games, and the moment when physical reality would finally hit. Well, that day is here. The alarm bells aren't just ringing, they're screaming. This is the moment the music stops. All those investors who thought they owned silver through ETFs and paper contracts are about to find out they were holding nothing but empty promises. The question isn't it if the silver market will break anymore, it's how fast and how hard. If you don't get what's happening right now, you're about to be on the wrong side of the biggest commodity explosion of our lifetimes. So, why is this happening? Why now? It's not just one thing. It's a perfect storm of problems all hitting at once. Let me break it down for you. First, we've had a supply shortage for 5 years straight. The Silver Institute has been saying since 2021 that we're using more silver than we're mining. For 2025, the shortfall was projected at 117 million ounces, one of the biggest ever. And top analysts at places like UBS and Fitch expect this shortage to continue all through 2026 and maybe even longer. This isn't a temporary blip, it's a permanent problem. Second, both the US and the European Union have now officially called silver a strategic mineral. This is huge. It means governments are now hoarding silver for their military, for new technology, and for their own industries. They're taking it off the market. This isn't a theory, it's official policy. When a government calls something strategic, it means regular people go to the back of the line. Third, countries are starting to restrict exports to protect their own supplies. China, a major silver producer, has already put export controls on other key metals. If this spreads to silver, the global supply chain will just snap. Big banks like Citigroup are now predicting silver could hit $100 an ounce by March 2026, and some analysts see it hitting $110 later in the year. Fourth, industrial demand is absolutely exploding. Silver isn't just money, it's the most conductive metal on the planet. It's essential for solar panels, electric cars, 5G tech, military gear, and AI infrastructure. The green energy boom alone is eating up silver like never before. The Silver Institute reports that industrial demand keeps climbing, while mine production is struggling to keep up. And finally, the most important piece of the puzzle, the paper market has been a ticking time bomb. For decades, the price of silver wasn't set by real supply and demand. It was set by paper contracts traded on exchanges like the COMEX. For every single ounce of real physical silver, there are estimates of up to 350 paper claims. That's 350 people who think they own the same ounce of metal. That game is over. The demand for real physical silver is finally breaking the paper system. Now let's talk about the opportunity, because in every crisis, there are winners and losers. If you understand what's happening, you can position yourself on the right side of this trade. The silver mining sector is about to experience a revaluation unlike anything we've seen in decades. Here's why. As governments designate silver as strategic and mints suspend sales, retail investors are being systematically locked out of the physical market. The "email me when in stock" message at the Royal Mint, that's not temporary. That's the new reality. When you can't buy physical silver, when dealers are out of stock, when premiums are 50% or 100% above spot price, when delivery times are measured in months instead of days, where do you turn? You turn to the miners. Silver mining stocks become the only liquid, accessible way for the average investor to get exposure to silver. And when billions of dollars from frustrated retail investors flood into a sector with a relatively small market capitalization, the price action is explosive. We're talking about stocks that could go up 500%, 1,000%, or even more. But the story gets even better. The miners are not just a proxy for silver, they're a leveraged play. When the price of silver goes from 30 to 90, so it's a 200% increase, the profit margins of silver miners go from slim to obscene. A mining company that was barely profitable at $30 silver is now printing money at $90. Their earnings don't double, they increase by multiples. And the stock market rewards that with astronomical valuations. Let's look at history. During the last major silver bull market in the late 1970s and early 1980s, silver mining stocks went up by 1,000% or more. During the 2010-2011 silver rally, many miners saw similar gains. Now we're in a situation that's potentially even more explosive because of the structural supply deficit and the lockout of retail investors from the physical market. The smart money knows this. Institutional investors are already positioning themselves. But the great FOMO wave, the fear of missing out, hasn't even started yet. The vast majority of retail investors are still asleep at the wheel. They're watching silver hit record highs on the news and thinking, oh, that's interesting, without understanding the magnitude of what's happening. When they wake up, when they realize this is not a temporary spike, but a structural shift, there will be a stampede into anything silver-related. And by then, the easy gains will already be gone. Here's the great irony of this moment. Despite everything I've just told you, despite the US Mint suspending sales, despite silver breaking $90, despite the 5-year supply deficit, we are still in the early innings of this cycle. The mainstream media is barely covering this story. CNBC mentioned it yesterday, but it's not leading the news. The average person on the street has no idea what's happening in the silver market. That won't last. When silver crosses $100 and Citigroup says it could happen by March 2026, the headlines will be everywhere. When ETF investors start demanding delivery and realize they're holding worthless paper, the panic will be global. When technology companies warn that they can't source enough silver to meet production targets, the urgency will be undeniable. That's when the FOMO wave hits. Right now, you still have a window. It's small and it's closing fast, but it exists. You can still position yourself before the crowd arrives. You can still buy mining stocks at reasonable valuations. You can still, if you're lucky and you move quickly, find physical silver, though expect to pay significant premiums and wait weeks for delivery. But understand this, the dynamics we're seeing are unprecedented. Silver has increased 191% in just 1 year, from $29 in January 2025 to over $90 today. The Silver Institute project's continued deficits through 2026. The US and EU have declared it strategic. Export restrictions could be coming. The paper market is a house of cards with a 350-to-1 leverage ratio. The mints are down. London vaults are under stress. Industrial demand is surging. This is not a normal market cycle. This is a perfect storm, a once-in-a-generation event that will be studied by economists and historians for decades to come. The only question that matters now is, are you going to be one of the people who saw it coming and positioned yourself accordingly? Or are you going to be one of the people who watches from the sidelines and then kicks themselves for missing the opportunity of a lifetime? The US Mint suspension is not just a news story, it's a 5-alarm fire. It's a blaring siren in the night. It's the final warning before the doors slam shut. The silver supply squeeze is here. London could be next. The clock is ticking. The time to act is now. Don't say you weren't warned.